Market Analyst here in HFM. So, Bank of England's out of the way, but pretty similar approach with the Fed, a really hawkish hold, it seems. Actually, the Bank of England, it actually has been the more aggressive it has ever been in 3 decades. So that's very significant. But in general, we have seen today the banks since yesterday night, the Fed, the Swiss National Bank, the Bank of England just now holding interest rates unchanged, even though they are not taken out of the table, further tightening until the year end, until for the next 3 months. So it's a bit of a relief, okay, at least in the stock market, that they haven't increased rates. But on the flip side, it looks to be more of a hawkish hold than a peak of the policy. Yeah, Bank of England, as I already mentioned. Let me share cable as well. Just a very divided Bank of England actually today. The votes have been 4-5, so five members voted for an unchanged policy, while 4 actually voted for another rate hike. So a very divided Bank of England today, even though they held rates unchanged. So that's why we have seen on the announcement a gap down. So there's some underlying sellers, some pending positions we're expecting on the news. So pushing the sterling lower at 122.33. So really sharp sell-off of sterling on the announcement that they left rates on hold, but you can see that it keeps the pressure still on the downside. They because why is on the downside? By the way, you can ask anything you want. This is your session, as I keep saying. So welcome Amar, welcome Hassan, welcome. So this is cable. 15 minutes chart, you can see that it gapped down, broken this previous swing low, extended lower below the second support of the day, okay, extending further well below 123, and actually slightly or with the tension turning to around 122 territory. This is because regardless of the pause, this looks to be more of a hawkish pause rather than a peak of the rather than the end of the tightening policy. With these comments that we have seen so far from the Bank of England, I can see the news right now. They have kept and maintained the tightening bias. Very similar with the Fed last night, with the CMP this morning. So keeping the rate increases on the table, remain data dependent. Let me see for the comments. They need more evidence that there is an actual drop in inflation. They need more evidence in regards to the labor market. So that's why for sure the further tightening is still possible and still on the cards until the year end. That's why there is still a pressure on pound. Guys, very similar with the Fed statement, with the Swiss National Bank statement, etc. You can tell me about Andria. It's a hawkish hold. They keep on the table further tightening. Why we don't see a bounce in pound? We don't see that because let's not forget that this is a cable. This is pound against dollar. So we still having a pretty strong dollar considering the Fed yesterday night, the yield differentials, right? The fact that the Fed right now is at 5.50%, while the Bank of England is at 5.25%. So there is a gap between 0.20, there is a gap of around 0.25%. Obviously we still have the US open, and we still have jobless claims today, Philly Fed. So these might give further volatility to the dollar, but for the time being, as you can see, we have a strong dollar. This is dollar index, RE chart, a strong dollar, okay, and come on, would like to put pound with us, for example, or in an undecisive pound. That's why there is some consolidation. Okay, cable, it remains under pressure. Is oversold right now, so we might see some kind of a consolidation because it's oversold. But um, the overall is expected to remain under pressure. And why I'm saying that is due to the yield differential, the yield differential first of all, but also to the fact that the UK economy is in a much worse condition right now than in US. Much worse condition. So it's not the central bank, the Bank of England, has not only kept the door for one additional rate hike, but for additional rate hikes. The Fed, from the other side, it just make it clear that one might be possible, one more might be possible. But the Bank of England was more generic. It kept the door open for additional rate hikes within the year. So because we haven't seen a significant pullback of inflation in the UK. Inflation remains high. Last week we see core inflation pulling back a bit, but it wasn't significant. It remains high. The labor market still remains quite tight. So, and the fact that the Bank of England stated just earlier that they will reduce the stock of bonds, the purchase of bonds by £100 billion over the next 12 months, that is also something that adds pressure to the pound, because it means that they are cutting the support that they are giving to the economy. Are there any further news from Bloomberg? Cannot see any. So yes, guys, a lot of indecision in this in cable right now. Overall, it remains to the downline like for more than 3 months, for nearly 3 months now. The fact that it broken the 123 and moves below it indicates the break of 6 months support territory. So it opens the door down to February and March bottom, with the very next support level at 121.50. It was an immediate, let me just zoom in. It was an immediate resistance area back in February, now converted into support level. So the next level to be closely monitored for cable is 121.50. Okay, you can see decreasing MACDs implying to an increasing bearish bias. More and more sellers are entering the market in the cable to the downside. So yeah, a pretty a sharp sell-off, not only for sterling, but also for Swiss after the announcement this morning that is holding rates unchanged. So Swiss, for example, I have over here Swiss yen, okay? That's a dramatic sell-off against the yen, breaking a resistance, a support area that has been seen for nearly the whole September and August, fell down further. Let me see. So breaking this triangle that I have spotted from the beginning of the month, and actually return back to the lows that we have seen to August and July range. So these look to be, look at that. I'm gonna draw that like that. So it jumped down and is somewhere in the mid of the range that we have seen the last 2 weeks of July. So further move to the downside will open the doors to 162 territory or even 160. But yes, there is a lot of distance, a lot of space until then. We need to make sure that this sort of continues, that bears are still in control, and that the 163 level actually breached and broken. If the asset managed to extend and held below 163, then a key support level could be found at 161.95. Uh, uh, Let me have a look. They are. Just a second, I can see your question. Sorry, guys. By the way, this is your session, so ask me anything you want. Yeah, I see your question, Srigantha. We'll try to reply as soon as possible. Gold. Someone, Francois, asked about gold. So, gold, please. So I'll start with the daily as usual. We have managed to see gold extending below the 20-day moving average. So 20-day moving average is at 1925. So let me go down to the 1 hour chart and see what's going on. So it extended losses, broken the first support of the day, moving further to the downside, and this is due to the dollar strength. This is it, Francois. This is due to the dollar strength. So that's quite a decisive, strong 1 hour candle, but still we need another 15 minutes for this candle to close. So allow me to put the 30 minutes chart on. So let me check down, hovering at the bottom of 1920. Moving average, I keep pointing downwards. Bollinger's expanded lower. MACD remains negative. A bearish cross from the stochastic with we indicating further fall, further area to the downside. RSI remains weak. So it looks that the intraday picture remains weak for the dollar. So 1915 is the next support level to be seen. It's a confluence of our second support of the day based on the pivot point analysis and also the 1 hour Bollinger Band area. So this is the next support level to be closely monitored. The confluence of the second support of the day based on the pivot points and the lower Bollinger Band level. Yeah, as I said, stochastic posted another bearish cross, MACD extending lower, RSI extending lower as well, kept below 50 all the whole day, failing to extend higher, as you can see. So a lot of weakness on gold, not because of the because of it has to do mainly with dollar strength. If I cannot, if I could sell solely, but yeah, it's dollar strength. It's dollar strength in the wake of FOMC announcement, in the wake of SMB announcement, in the wake of Bank of England announcement, or with all three having hawkish holds. So it's more of a dollar lift, Francois, rather than gold picking up, having demand. It's more of a dollar pick. Okay. So euro dollar. Yeah, guys, it's all about dollar strength, I'm afraid. Okay, what we have over here is after this sharp sell-off down to 106.16 territory, we have seen a resumption of this, a bit of a pullback this morning, a bit of a correction, but another pullback lower again on dollar strength. Yeah, this is a clear dollar strength. So this pullback again, support is remains on the low of the day. Okay, on the low of the day, it has been to the downside for nearly 3 months in a row. Remains in within the channel, if I'm not mistaken. Let me just. The standard deviation is wrong. It should be. No. Much better, but not ideal. Yeah, it's a very aggressive sell-off. Yeah, I'm gonna put two channels on just to help me in the intraday setup as well. So you can see it's in a very tight. So the gap between my regression channel and my linear channel could provide a support and resistance area for euro dollar. So you can see it remains to the downside for nearly 3 months, 3 consecutive days to the downside. Key floor remains the 106.16. A break of this floor could extend and turn the attention to 155 level, 155 territory. Look at that. So, okay, that could be the next level to be watched. 155. If we see 105.60 to be precise, 65. If we see the asset extending further to the downside, breaking this latest swing low at 106.16. This is the 1 week's bottom. So if this is break, then there is further steam to the downside, and a break of 106 level could open the doors to 105.60, 105.50, and around 105 territory. So, yeah. What else? Intraday for euro dollar, again a very negative intraday and overall outlook for euro dollar. I'm gonna put the 30 minutes chart sideways on the announcement. It put back down, holding some floor. But yeah, let me put the. Yeah, look at that. So put back down, trying to find some support, but there is a lot of pressure. So RSI fails to indicate higher, to point higher, so remains below 15 is a bit flat. MACD is also a bit flat. Stochastic is pointing down. So yeah, a further selling pressure rather than a bullish support. So a bit of a consolidation might be seen in the upcoming sessions, in the upcoming and then near the next few hours or even minutes. Um, what else? Okay. Let me scan a bit what's going on into the news feed. And if there is no further news, I'm going to call it a date. So inflation indeed is falling for UK, but not sufficiently enough in order to convince, for the time being, Mr. Bali and his colleague to take the hikes off the table for the upcoming months. So dollars are, please, yes. So yeah, we need to see that inflation needs to go where it needs to be in order to indeed announce officially the peak of the interest rate. So data will be closely monitored. We will need to keep rates high enough and long enough to get the jobs done. This is what Mr. Bali said. So I can see a pullback of cable over here, trying to possibly close this gap, but all the momentum indicators, as you can see, indicate that there is a lot of selling pressure. So a correction, it looks to be limited. So you see, there is a bit of this bounce. It's been supported by stochastics, by RSI, but it looks to be limited. Just it might be a bit technical to fill the gap, but overall remains to the downside. So we might see a bit of a pullback, a correction, because we are in an oversold condition before another attempt to the downside for cable. Now, last but not least is dollar ZAR for my friend Small G General. Dollar ZAR. Okay, so where are we standing? I'm just I can see that. Okay, this is the daily chart there. Small G. Let me just fix a bit the standard deviation that I have over here. $150. There is a channel being created on the beginning of September, with the ZAR crossing today and moving above the mid of this channel. So attention is turning to the 1910 territory, the 1910 high, or even actually yeah, 1904. So let's see what's going on intraday. Here we are. After this swing low, which with the dollar ZAR quickly turn higher, returning all these losses and getting back to where it was before the Fed. Today we had another swing low, just in the Asia session. This is the 1 hour chart in dollar ZAR. Again, getting back to the 3 days highs, extending back above 1890 territory. So this is a very important resistance area over here. Very important resistance area, small ZAR. Repeated swing highs for 1 to 3 sessions in a row. Let me just put the intraday setup as well, just to see whether we are getting any clearer. Okay, yes. So very, very interesting actually. We have a bullish crossover here of the 5, 9, and 20. And 50 exponential moving average, bullish cross, the 5 and 9 pointing higher. We have two consecutive bullish candles. However, this needs another 6 minutes until it closes. But so wait for another 6 minutes before you take any decision to see how this last 30 minutes candle close. But with RSI keep pointing higher, stochastic keep pointing higher. There is some in the near term, in the very, very short term, some strong support for dollar ZAR. And again, this is dollar strength, mainly dollar strength. So keep an eye how this 30 minutes candle will close, because if it closes like a full body candle, that will indicate further steam to the upside, with the next immediate resistance level at 19 territory and 1910. So yeah, keep an eye on that. Everything, this candle will close in 5 minutes. So keep an eye and use this range, these days highs and these days lows as your trigger point, because a break of days highs could indicate further steam to the upside, while a failure to break it and return back down indicates a return and a potential reversal back to 1880. So it's in a range market so far today. What we need to see is whether it will manage to break the high of the day, due to the dollar strength. Guys, that was pretty much it. I'm gonna call it a date. Have in mind that all this news have actually. Where is the? This is not. This is Dow Jones. This is Nasdaq. You can see that all these hawkish halts are actually a headache for stocks, global stocks, because the fact that regardless of the hawkish halts, the bankers are keeping additional interest rates on the table is bad news for tech sector, for corporate sector, for stock sector in general. So bonds and stock markets are in a sell-off since yesterday. Yields underperform on the announcement that the Bank of England will cut 100 billion pounds in the upcoming months. So yeah, stock market, the global stock market are in red. Nasdaq over here broken the 15,000 territory and extends further to the downside, already breached the lower Bollinger Band territory, with the next support area down to August bottoms. Yeah, bad news for stock market. You can see intraday that the sell-off continues. Look at how negative, how far away MACD is from zero. Sell-off continues. Selling pressure continues ahead of the US Open. The same stands for Nasdaq, the same stands for Dow Jones, the same stands for S&P 500, the same stands for European indices. This is DAX extending lower, breach 13 of September's bottom. Let me put the daily chart on so you can see that there is a floor at 15,560, and breach and break of that level could open the doors on August and July's bottom at 15,460. So another 100 ticks lower. FTSE is a bit undecisive, dodgy daily candle. So let's have a look on the 1 hour chart. Swing high on the Fed, swing low overnight, swing high on the Bank of England announcement, but yeah, a lot of indecision actually. Yeah, but it's back down somewhere in the middle of this range. So let me use my Fibonacci to see where it's standing. But yeah, you see, it's like It held back down this swing high. It held back down and is somewhere in the middle of this range that we have seen since yesterday. A lot of indecision. Is actually is the announcement, the hawkish halt, but also the announcement for £100 billion. It's a billion, yeah, £100 billion cut of gilts purchase. That was it from me. Thank you very much for watching. Have a great day ahead. Next into the agenda is the jobless claims for US and Philly Fed, but the attention, I think, and existing home sales, sorry, but the attention could possibly be still on in Europe, in the ECB, on the ECB President Lagarde speaking later on, and the consumer confidence from Europe. It's a preliminary reading, so it might don't impact significantly the market. But yeah, so let's wait and see. Let's wait and see. Have a great day ahead. Take care. And I'll see you again later. Bye bye.